Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session in the Forex trading room for January 19th of 2020. We'll go through our standard agenda. I'll look at the prior week on the different trading accounts, our currency strength meter for the past week and past month, any fundamental announcements on the calendar for this week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Cash ledger, not much change, no change at all. We still have the same open trade with the pound CAD on a short. No change other than that. That trade's been open since the beginning of the year. It is still open. It's been going both directions at a loss and a profit. Right now, it is carrying a small profit of about 40 pips. No significant change otherwise. The intermediate term ledger, we did have a slight drawdown, about 3% this week on closed trades, but we still have trades that are carrying that much profit and more. So actually, the on open trades, we had, I think, 3 trades closed out, one of them at profit, 2 at a loss, and you can see all the remaining trades that are open on the screen right now, except for the Euro Swiss, which is off screen. It got opened in November, and that one is carrying the bulk of our open profit, about 230 pips right now. The remainder, some of them are carrying losses, some are at profit, a mixed bag there. But the account is looking nice and healthy on the open trades. The short-term account, we did have a very small drawdown, 1/3%. Last week, we had one trade carry a significant loss, well, based on the size, and another trade almost but not quite made up for it. So we did have a very tiny drawdown. This is pretty much how we're going to be managing this account going forward. If you'll recall, towards the end of last year, I said we would be rebalancing this account, and we're looking for smaller, steadier gains. And when we do have losses, which again are inevitable in trading, we will try to limit them as much as we can. This week that just ended was a pretty good example of that. 0.35% negative, nothing, but we did have some nice exposures to profits if the market had turned in that direction. So again, work in progress, but it looks to be working fine as is right now. We'll continue tweaking it. More to come on that, but it is starting to work out. It's an opportunity for some nice moves, active market kicking into gear as the year begins. The pound is showing increasing fragility as yet another Brexit deadline looms. Right now, it's scheduled for the end of this month. That could still change, but it looks like it does have a very strong possibility of actually happening this time around. And our standard reminder at this point that we do have our dates for the live event that we're going to be having this year in Pennsylvania towards the end of April. More details on that on our website. Relative strength meter for the week that just ended and the past 30 days. So we can see on the 30-day chart that we still have the most significant movement coming out of the metals. So silver and gold started the year or ended the year, I should say, significantly stronger than anything else. Not a whole lot of movement in the last 30 days on the currencies themselves, though we do see, of course, that some of them won, some of them gained, but just based on the shade of blue or red in each one, the movements were not really significant. The really strong movements were in the metals. For the week that just ended, the clear winner, and you can see that deep blue color, has been the Swiss, and we did make some nice profit on both the short-term and intermediate-term accounts on the Swiss movement. Particularly the Euro Swiss, as I mentioned, we're carrying in excess of 200 pips of profit right now. So it has been a very good run for the Swiss. I do think, and we're going to look at this a little bit further when we get to the charts, but I think it is a little bit overextended, and we may be in the midst of a pullback. Even if it does end up going into further strength, it's sort of at the end of its leash. But again, we're going to be looking at that further when we get to the charts. Other than that, the pound lost out, the yen lost out. The clear winners for the week, besides the pound, would have been the dollar, and well, that's pretty much it. All of the other, well, and the CAD, dollar and the CAD, I would say, were the other winners, along with the Swiss. And well, that's where we ended the week. There wasn't a whole lot of volatility for the week. It was a little bit over 1%, but definitely the market is showing signs of waking up for the year. Our events for this week, we've again, the year is definitely waking up. We've got interest rate decisions coming out of Japan and out of Canada and the European Union. So those are our three main ones. That will be Monday for Japan, Wednesday for Canada, and early Thursday morning for the European Central Bank. And besides that, we do have the employment numbers coming out of Australia Wednesday evening. So check your calendars for the exact times we're going to be trading these, and I do hope to see you all there. And that will move into the chart, starting with our oil, and we can see that not a whole lot of movement for the week. It started out drop, found support at the 58 level, and ended the week pretty much where it had started. So not a whole lot of weekly movement other than dropping and coming back up. But we were coming off a significant drop after the Middle East tensions eased the week before. So we'll have to see how this ends up playing out. Suffice to say that the oil is still significantly stronger than it has been for quite a while. The currency, euro, nicely after testing the underside of that trend line. We are carrying a short on the euro dollar on the intermediate term account, and I think it still has quite a ways to go. Actually think we may be revisiting the 110 level, which is a good 100 pips below where it is, perhaps even deeper. I'm not looking for much more than that on this pair, so I think my limit is already set on the euro dollar. We'll see how it plays out. But again, I don't expect this to be a breakout. It's pretty much just bouncing between support and resistance until further notice. Pound dollar had it seems to test the underside of that channel, the underside of the Ichimoku cloud, and then ended the week dropping quite nicely. We have an open trade on this one as well on the intermediate. It is sitting at support. Obviously, from everything you've heard me say in the past months, I am extremely bearish on the pound. So I do expect this one to travel towards the bottom of the chart, and we will be trading most of the pound pairs into weakness. There's a few I may sidestep. The euro pound is one of them, simply because both currencies are weakening at this point, and we'll see that when we get to it. But this is one that I wouldn't mind riding all the way down to the bottom. USD JPY overextended. The yen seems to have been weakening rather unexpectedly, surprisingly so. There's really nothing negative or too negative coming out of the Japanese economy right now. Obviously, the yen is vulnerable, or maybe vulnerable is not the right word, but it is affected by other geographies. It is a safe haven currency. So we will see it tend to get stronger when there are issues in Europe or in the Americas. And when the issues go away, it tends to get weaker through no fault of its own. But this is another currency and another pair that I would see a good opportunity for it to reverse its course and head towards the bottom of the chart if anything starts happening. And you got to keep on it. It's not a given, but it is overextended, my opinion, at this point. USD Canadian still moving into Canadian strength rather significantly. It has pulled back to a prior level of resistance in the past couple of weeks, but hasn't broken any significant trend lines. It is still very close to the bottom and very possible that it will be breaking out to lows that can only be seen if we move out to a weekly chart. So this is definitely one that I will be keeping an eye on. It's pretty much the same, though I don't think it has as much potential, the Swiss franc, to go into strength as does the Canadian dollar. So I do think that this one has played out. I've been trying to catch this move towards the bottom of the chart for quite a while. It finally happened, and we caught most, so I'm not complaining. But I do think it's far more likely that it will go back to the parity level, even if ultimately at some point in the next year or so it ends up going deeper than it is right now. I think this movement is done. So I'll be keeping a close eye on it. If we do see a breakout towards the bottom, obviously I will trade it. But I'm far more likely to look for opportunities to go long on the USD Swiss in the month or so to come. Aussie dollar, another one that I think will be revisiting the bottom of this chart. Aussie is weakening, and the dollar seems to be. We've had the U.S. economy continues to make higher highs. The Dow Jones has been making higher highs every week, pretty much for the past month. Highs never before seen. So the U.S. economy seems to be humming along quite nicely. That will end at some point. I do expect some sort of pullback, call it a recession, call it a correction, whatever you want to call it. I expect that to happen in the very near future. What that means, a month, 6 months, a year, no one can say. But I would expect to see a pullback. So long as we don't see it right now, though, this is another chart that is perfectly capable of going back to the bottom, giving us some nice opportunities. So if it does break support, we will be trading it. In fact, I think we already have an open trade on this one, but we will be looking for opportunities to maximize that on a breakout towards the bottom. Same thing with the Kiwi dollar. I think a trip to the bottom is not expected. The New Zealand economy doesn't have as many issues, and it's a smaller economy as well than Australia, especially since their island isn't on fire like Australia seems to be right now. So this one may be a little bit less inclined to give us a massive drop, but I do think it's overextended, and at the very least, we're going to see a test of that trend line we see rising from the bottom. We're already in this trade. We're at profit, actually a measurable profit on the intermediate. So we'll continue letting this one play out, but at the very least, I would expect it to drop below the 65 level, so another 150 pips or so before we see trying to bounce back up, indeed, if it even does. Aussie Canadian is sideways, has been sideways for quite a while, and is closer to the bottom of that sideways range than the top. I do think the CAD, as I mentioned before, has a lot more upside than the Australian. So this one may be a breakout at some point in this first quarter of the year. So we will be trying to trade it down as much as possible. Eventually, we're going to have one of those nice sustained trends. Or at least that's the hope behind it. If not, we're always trading safely, so no harm, no foul. But we have to get into some of these trades in order to be exposed to the big wins. Euro Swiss obviously are big hero of this last month. Indeed, these last 2 months. So we have our longest open trade right now is a short on this pair that was open sometime in November. So we did catch it very near the top of its sideways range, traded it all the way towards the bottom and kept on through the breakout. As you can see in this last movement, it really hasn't done any significant retrace since, well, since back in November. So we have not been taken out of this trade. I have been tightening the stop loss very conservatively as it makes the new lows, because I do expect at some point for there to be a pullback. But it isn't giving us one, so we'll continue writing that trade down as far as it goes. I think of the 230 pips or so that are open profit right now, I protected about 175, and very soon I'll probably move that over to protect 200 if this current movement continues. Euro pound, and this is the one exception on the pound pairs that I wouldn't necessarily be trading it into pound weakness regardless of what happens, and that's because the euro is also significantly stressed and dropping against almost every other currency. So this one may not give as much potential as some of the other pound pairs. If the euro does get some sort of firm footing, this one could easily go back up towards the top of its range, towards the 0.93 level. But that's a lot of ifs. So this one might not be the best pound pair to be trading. Euro JPY, this is another overextended one towards the top, another one I expect to give us a nice drop towards the bottom. The question is, when will that happen? Of course, we can't know, but I will take every opportunity to trade it down very cautiously until it does pick up speed. But at some point, we're going to get an opportunity for an easy 600 pips out of this pair. Euro Canadian is also very near the bottom, but as with the Aussie CAD, I do expect Canadian strength to prevail against its counterpart, in this case, the euro. Euro weakness, I just finished saying I don't believe in the euro at all right now. So this one is another candidate for a breakout out of that bottom 144 range. I think we already have an open trade on this one with a bit of profit. Again, I'm looking for that breakout and a continuation of the trend. We'll see if it gives it to us this month, or we're going to have to wait a bit more for it. Other than that, it is sideways. So it has been bouncing sideways. And of course, until it gives us the breakout, it is still in sideways mode. Pound JPY, yeah. And again, here I expect towards the bottom, especially since it is a pound pair as well. So this one is giving us at least 800 pips of potential on a test of the bottom range of the current chart. Of course, we need Brexit to help us along, and this one is a double whammy, because if Brexit is bad for the pound, of course, will weaken. But more importantly, the yen being a safe haven for England, the yen will tend to strengthen. So this one will be moving stronger than any other pound pair or yen pair, simply because both of these currencies will be in them. That's a very good thing. This is definitely one to keep on the top of our radar. Aussie JPY, and this is going to be a similar statement for all the yen pairs. I do expect them to head towards the bottom. So this is another one that is pretty much overextended towards the top. I am trading it. We're carrying, I think this is our biggest loser right now, with about 70 or so pips negative, but I'm keeping that trade open so long as the dropping trend line, that resistance, doesn't get broken. I'm willing to wait it out and reap the benefit of that trip towards the bottom if and when it eventually happens. Euro New Zealand trade went all the way from the top towards the bottom. Well, we took a loss last week on that spike that broke resistance, but that is nothing compared to all the profits we've made on this pair all the way down. Euro weakness, I believe that is the flavor of the quarter, is going to be euro weakness along with pound weakness. What the Kiwi does, however, is not so set in stone. This one could easily go sideways for a while, but if we see a little bit of strength out of the Kiwi, it could also give us a pretty nice breakout. I'm willing to trade it in either direction, but for now I'm cautiously bearish on it, but I'm waiting for a good opportunity to jump back in. Now, Canadian open trade on the pound weakness, Canadian strength. Hasn't seemed to be cooperating lately. It's gone into a very tight sideways range. But again, these things are normal. We can't predict when the movements happen. We can only trade and try to be there for when they do. So I'll be leaving that long-term trade open. It's got a pretty wide stop and just let it work its way towards the bottom if and when it does. Last but not least, the pound Swiss, and this one has been moving nicely. It's our second largest open profit on the intermediate term account. So this is another one where I'm not in. Actually, I'm sorry. We did get taken out of this trade late last week, so we took our profit off of it, and then I jumped back in. So we're in this trade again. It's carrying a very small profit right now, but that's after taking profit last week. So to the bottom for obvious reasons, pound weakness and Swiss being another one of these safe haven currencies. And again, I do expect it to drop all the way to the bottom, perhaps even deeper. Setups in progress that I see for the week. I've said it throughout the session. The pound is at a crossroads as Brexit is again looming closer and closer. The dollar gaining strength as things do seem to continue working out well for the U.S. and for the current administration. I didn't even change this message from last week. It's the same one we had last week. Why? Because it did that Dow all-time high again this week. So that's 2 weeks in a row that we've had an all-time high out of the Dow Industrial Average. The Canadian pairs, they are hanging on to gains as we've seen in most of the major crosses. And it may be even poised for a breakout deeper than it has for quite a while. We'll see how that plays out, but that is my impression of the potential of the CAD right now. The Japanese pairs don't seem to have much downside left, and I pointed this out as well on the charts. They all seem to be overextended into yen weakness, and at some point there will be a pullback, especially against the more fragile currencies such as the pound, the euro, and the Aussie. And last but not least, the euro pairs, they are still in a retreat almost across the board. The only one where that retreat isn't very obvious is against the pound. Other than that, the euro seems to be weakening quite steadily against everybody else. That's it for the bulk of the presentation. My parting words here, and I always try to focus on something that's come up in the last weeks. But Sea of Red, we started out the week with pretty much every trade negative except for that 1 euro Swiss one. And I get these questions often when this happens. Oh my God, all the trades are losing right now. What are we going to do? Nothing. This isn't a gumball. This isn't something where you put a coin in and it spits out a piece of chewing gum every single time. We are going to have losing trades. Some of these will come back, some won't. Some will be closed at a loss. It's perfectly normal. What do we do when we're winning? We keep following our systems. What do we do when we're losing? The same thing. We keep following our systems. And I repeat this every now and then simply because it keeps coming up every time we have any significant open losses on the account. That's one of the perils of what I do. I do trade live. I think I'm one of the, I think I'm the only one actually of any of the Forex academies out there that actually does trade live and lets people see their results in real time. Sometimes you're going to have losers. All of the other coaches and academies I know, they will only show their good results. If you look at their published results, it seems that their accounts are growing by 100% every time. That's because they only show you the winners. That's not to say they're losing money. Well, some of them are. Some of them aren't even trading. But the key thing is that they won't show you the losers. And I think this is a disservice to anybody who's following them or trying to learn, because they don't get into the habit and the realization that you are going to have losses when you're trading. If you're trading the right way, your wins are gonna be bigger than your losers. Your account balance is going to be heading up steadily, but you will have losing periods. You will have times when your trades are negative, this is perfectly normal. So try to internalize that so you don't get all worried and nervous when things are going in the opposite direction. This will happen. Right now, they're again going great, but if we had been nervous, we would have closed out all of the losing trades early last week, and then we wouldn't have the recovery we're seeing right now. So keep that in mind to try to make it part of your underlying philosophy so these things don't make you nervous or startle you or anything. And I'm going to leave this. I mentioned this last week that I'm trying to see how we can help more people than we've been helping. And I am asking for suggestions. One of you already sent me a few words in that regard. But any suggestions that you do have as to how to reach more people, how to get more people involved. And again, this isn't me trying to make money. I could care less. I'm honestly trying to see how we can help more people dig themselves out of whatever hole they're in right now. I use the graphic there in the background of the oxygen mask coming out of the airplane ceiling because I do believe that we need to help ourselves before we can help others. I already did that. I'm at a point in life where I quit my job, so I even left the spot open for some other poor bastard that needs to work for a salary, so they have that spot open. I'm not dependent on anyone. I make my own money out of the market, out of the investment. So I'm in a position where I can actually, I've got my mask on and I actually help other people put their oxygen mask on. I just don't know how to go about doing this. So any suggestions you have, do email me. I'll be happy to get them and consider them. And that is questions from anyone. Okie dokie, then thank you very much. This is a wrap. I will see you guys in our next session. Check the calendar for any fundamentals, but our next session at this point will be the 8 p.m. tomorrow evening. Thanks a lot. Have a rest of a great weekend.